title of her latest report is Wakey Wakey. All right, Stephanie Pomboy, the president of Macromavens, a little bit of a wake-up call for investors in this first quarter of 2010. Stephanie Pomboy, good to have you with us.
Thank you so much.
So what is this wake-up call that investors are seeing? You said that we've lived through, what, a fourth quarter boomlet in inventory rebuild, but now, reality sets in.
Yeah, I think you could feel that in the markets last week, where almost, the moment the week began on Monday, people were looking ahead to the fourth quarter GDP and realizing, oh my goodness, this inventory build that we've been anticipating so long and betting so heavily upon is almost going to be behind us. So we've got to figure out what's the next key driver of growth, or is there some substance within that GDP report that can give us some indication of what is going to propel the economy forward from here. And I think it was clear that there's some skepticism about exactly how we're going to move forward, what's going to lead us, and whether whichever sector does lead us will be able to do so in a manner that justifies the level to which asset prices have already levitated.
Uh-oh, not another bubble.
Right.
I mean, come on, really. I mean, because if we take a look at that GDP report, right, if you strip out the inventory rebuild,
right,
it doesn't look as though there's real demand, at least not a 5%, 5 point something, 5.7% demand in those GDP numbers, right?
Exactly. Real final sales, which is just GDP ex inventories, were up 2.3%. And, we're still looking at year-on-year comparisons to that easy, period of last year. If you look at a 2-year % change on real final sales, for example, it's hitting record lows. So this was not a strong report when you strip away, the anticipated inventory boom. There was some excitement, I think, about the increase in software and equipment spending. It's possibly presaging an increase in CapEx, and that it's okay that consumer spending isn't that strong because the corporate sector, flush with
right, it's going to take over for the weak consumer.
Exactly. So we'll have a CapEx-led recovery. And it's a delightful notion. Unfortunately, the only time that CapEx has ever picked up with top-line growth slowing, with consumer demand still declining, was during the dot-com bubble. So basically, they made a bet that consumers would eventually come around and meet the increased investment that they were building, and it backfired big time. So,
like throwing a party and nobody shows up.
Sort of like that. And they were clearly swinging from the chandeliers at that party. And so I think their impulse to do that again is understandably low. And that's why I'm highly skeptical about the idea that CapEx will lead us forward in any material fashion. We may get a little technology replacement here and there, but nothing that's substantial enough to create the jobs we need to create and really propel the economy forward in a sustainable way.
Step back a little bit and help us understand what's going on in the world of real estate, if you can, because I mean this is really essential to what is going to have to happen to asset prices, right? I mean, if you don't get any kind of rebuild in the real estate market, which is most people's major asset,
exactly.
What does that tell you about the asset prices in general?
Well, I guess I'm glad you bring it up, because I think a lot of people have sort of gotten so acclimated to the fact that we've had this housing bubble and bust that it's almost defanged in a way. We're used to seeing prices continue to go down year on year at a modestly slower pace, but, we've gotten acclimated to it. And that's a very dangerous thing, as anyone in Japan can tell you. When you get accustomed to deflation, you're just the interest in getting into that market is never going to be the same. I mean, the longer you get used to prices going down all the time, the more you assume they will go down forever. And I think that that's a major drag on consumer psychology, which Wall Street has the luxury of living in a separate world where stock prices happen to rally 64% off the bottom.